Hi, Chris.
Okay, can you hear me here?
Got you now, Chris.
Okay, great.
All right. How are you, buddy?
I'm great here. Let me see if I can figure out how to do all this again.
All right. The share screen's a green button.
Yeah, I
Drop
think,
down.
did I get that?
You got it.
I've got it. All right.
Yeah. It's small. The chart's pretty small, but it's up there.
So pretty small. I wonder why it's small. Let's see. Does that help any? Is it
You must be using. I'm assuming you're using a screen that's probably like 32 to 9 dimensions.
Yeah. I've got an ultra wide monitor.
Yeah. So that's why, Dale.
Okay.
You can zoom in. He's using an ultra wide monitor, and due to the width, the height has to
I,
be.
okay. Well,
Uh,
I could make it out,
no, no,
Chris.
no, no. I'll tell you what you can do to help everybody, Christopher.
Yeah.
I'll tell you what you can do. Listen, what you're going to do. You're going to um, change the size of your browser. Good. And now what you're going to do is that you're going to reshare your screen, but instead of choosing to share your screen, you're going to choose, there is an option if you browse lower when it tells you what you want to share. Instead of choosing to share a screen, you're going to choose to share a window, and you're going to share your browser. And that
Uh,
should make it much easier to see.
okay, so I can just do it with just the browser here.
Yes, I mean, if you go to share screen and share options, there
Does
you
that work?
go. Yep,
All
Yep.
you see. Now, if you
Thank,
want, you can give it a little bit more width as well.
right. Okay, great. I
all
appreciate
right.
your help.
Yeah. Thank you, Steve.
There you go.
Yeah.
You
Steve's
see.
like a producer.
It works
Yeah.
for me.
All right. All right. So, okay, Chris, I noticed in the tweet that you sent when I was announcing the lineup that there was a lot of action last week. Kind of gave me the impression that some things happen that gives you conviction about a few different markets. So, what are you seeing here in gold, buddy?
All right. Well, I've been on here a few times, and
Yeah.
my thesis continues to be that that gold's gonna, head on down toward, around $900, $1,000, somewhere right around there. And so far, it's doing it. We're kind of stuck in this bit of sideways right here at the moment, sitting right above this previous area of cluster of activity here
Uh-huh.
from back around April and May of last year.
Christopher, if I may ask, that thesis is probably fundamentally based on what? Deflation?
Well, yeah, exactly. I mean, that's where it's come to now. Before all that, prior though, I was looking. Let me kind of zoom out here a bit. Uh, I'd already been kind of looking at this as a expanded. Well, we were looking at it a flat to begin with, just where we had an A and then a B up toward this previous high, and then bring that C down, and then of course it went on up above it, so now it's an expanded flat. But the same idea kind of holds, and then that's the way I've been looking at it since right about let me see here. I started talking about that back here, I guess right around 18 or so here. And then as this has continued to develop over here over the last few years, the deflation argument I think really kind of comes out a lot stronger today than it has previously. So yeah, that would
Why?
exactly.
Why do you feel that way, Chris? Because everyone is talking about the moves we've had in grains and
Mhm.
base metals and the Fed and stimulus. So it's hard. It's definitely a contrarian view, deflation now
Mhm.
compared to what it was a couple of years ago. So, what keeps you steadfast about deflation being a force with all the other forces trying that would traditionally create inflation?
Exactly what you just said. You know, you guys know, when you've been in the market a while, and you start seeing all this euphoria hidden, and we're seeing a euphoria not just across one or two markets, we're seeing it across everything. We're seeing, everybody's talking about the new bull runs just started for equities. After what would probably be, basically the shortest bear market in history. Um, everybody's talking about gold, 3,000, 5,000, whatnot. I've heard people talking about 10,000, and these numbers start getting kind of crazy. That's always one of those first things that kind of gets my attention, because, we've been through, the dot-com bubble back then, and, the GFC there in 2008. And, prior to that, the things we had. And so when you start looking at a lot of the different metrics, you start finding that the market itself, all these markets are kind of at these points that they've been at major inflection points where they've reversed previously. And, everybody, death of the dollar, dollar's dead and dying. It's going to go down forever. I think there was a survey here not too long ago where they mentioned, the three most crowded trades, and they were long tech stocks was the first. Second was short the dollar, and third was long Bitcoin. And, bring up Bitcoin there as well. I mean, everybody, all the talk right now is, minimum of 400,000 or 500,000, and, 200,000 by the end of the year, 5 million here in a couple of years. I don't know, just to me, it seems this is all that topish talk. And then you look at things like things that I've discussed before, where we had with, oh my gosh, when you look at things like Schwab slices, and you've got the micro minis now that you can trade, and whether 0% commissions, all these things that usually happen at the tops of markets, all coming out here now. And there was just an article just recently, I think it was on Bloomberg. It says newbies discover pink sheets, talking about
the penny stock volume has never been higher. It's setting records. Yeah,
absolutely crazy. Yeah. And so, that's my first thing right there, that hits me, and I'm like, well, let's kind of look at everything else.
But what more importantly is the wave structure to support being a contrarian, right? And even if you are a contrarian and you're looking for lower markets, you still have to manage risk on the upside, right?
Oh man, always. The biggest thing, especially Dale, you've helped a lot of traders, get into trading and doing it properly. And, one of the biggest issues they always have is that risk management. And they get into this point that if you talk about something on a more macro level, many of them mistakenly believe that you can't possibly, that you're just sitting on the sidelines, and that's ridiculous. You always trade in the direction of the trend until it isn't anymore. But the idea is to get an idea of when it might not be anymore.
Okay. So where would that be in gold? This 2-3 year, well, gosh, it goes all the way back to 2016, the lows at 1050.
Mm-hmm.
Technically, aren't we going to need something like under 1,500 to kind of confirm the bearish wave count that you have?
Yeah, actually, I'm looking like around 1508. Actually, yeah.
Okay.
Okay. We could look at other things here. I mean, right here on the weekly, you can see we've got this bearish divergence here with the RSI. We've got it dropping off here, lower highs and lower lows here, while prices made those higher highs and higher lows.
Yeah.
Okay. So we look at that, but I think one of the biggest things is I think when we jump over to the dollar, I mean, y'all were discussing some great things this morning. I don't disagree with a lot at all, honestly. But I think it all comes down to the dollar here. And I mean, I'm kind of on the same page here right now. I'm not sure this is the bottom yet. It's possible, but there's no confirmation. I'm really kind of looking initially for a move above this. What is this here? This wave
95,
90.88.
Oh, okay.
This right here is the big trend. Let me kind of zoom out here a minute. We've got this big drop here from back in March. This large
COVID
thing here. Yeah. And so we're about to get, we're near the breakout of that. And I kind of think that really sets a tone if we make that breakout. We're getting a bounce right here from back around where we were here in 18.
Right.
And so 2018 January there, that's, of course, where we had the December 17, 2 weeks before that was where Bitcoin kind of hit its high. And we had all that going on, and then we make this move up. So we're kind of looking for a reversal out of this area here. And I think if we get it through this descending resistance, I think that really kind of sets the tone as far as
Ballpark, where
within the
would that
markets here.
resistance be taken out, buddy?
Say that one more time.
Ballpark, where would that resistance that you're talking about be taken out? 92-ish?
Yeah, it looks right here around 91 or so. Probably take a little bit of time. It depends on, we know that the dollar here can pop up pretty quick and hard. Probably, right there around 91, maybe 90,
Okay.
depending on how long it takes to kind of get on over there and do it.
Mm-hmm. Okay.
But, again, to me, it's getting through this wave 4 here and this descending resistance here to really kind of set us going there. But I think a lot of it comes with, again, everybody's still very bearish the dollar. And I think it's because people tend to think that inflation or that QE is inflationary. But that isn't what we've seen. I mean, it inflates asset prices. But, a lot of that money, basically, most of that money just kind of goes in the Fed's vault there. And, so banks can, reference it as that they've got the reserves required to make these loans. The Fed's trying to get them to make the loans. At the end of the day, we're a debt-based society, a debt-based economic system here. So we have to have credit
Creation?
Yeah. So if we look over here at, let me see here. Here's Fred. That's the St. Louis Fed site. And we can see here's the problem. This is, basically it peaked out here around May of last year. Let me kind of pull this over here a little bit. But you can start seeing how we've been dropping off here. This is loans and leases and bank credit, all commercial banks. So we've got a contraction of credit going on. And then the same thing right here with the credit cards and other revolving plans, all commercial banks for commercial loans. I mean, consumer loans dropping off here. So, the Fed needs the banks. The Fed creates dollars, yes, but most of that money creation needs to come from the banks, lending out new loans. And the problem is the banks aren't doing that. They've been making it more difficult to get loans. And beyond that, people don't want to get it. People have been paying off their loans. We had in May of last year, I believe it was May of last year, the U.S. savings rate was at the highest rate ever, or something like that, 30+%.
Right.
And so, my whole thing on all of this, it goes even beyond deflation. Or it becomes, this whole idea of the top of the credit bubble. If we zoom out, we've got this cycle here from, this is the Dow Jones here from the Great Depression over here, running up to where we are right now. And, again, looking at something like this, this runs this cycle here. This is this grand super cycle we're talking about. So if we're talking about Elliott wave, basically, you'd hit a 1 up here and a 2 back down at the bottom of that stock market after the Great Depression there. And then this would be a 3 where we're at here. So we've got a 4 on the pullback. So when we're talking about large cycles, this is where it's all started for me, is looking at this particular cycle right here. And I've been I guess sounding a bit more bearish than most, for a bit here. But again, if we're talking about a large cycle like this, it's going to take a little bit of time to unwind a bit to convince people to head down. And so when you look at all that euphoria and whatnot that's going on at the moment, it's hard to say, it's not going to be, it's not going to happen. It's hard to say that with the kind of everything that we've got going on here. I would be.
Do you get pushback from subscribers and mentees and people?
You know what? Honestly, I've got the people that we have with us that have joined us are very open-minded, and that's great. And they understand that I'm not trying to tell them how to think. I'm just trying to get them to think and to understand how things work and what may come off of things. Because at the end of the day, when you talk about, these global macroeconomic things, these are things that they're a little difficult.
I love that. You're not trying to tell them how to think, but teaching them to think.
Exactly. And, a lot of people get into the markets and they get in at this point, over the last few years where everything's real frothy and everybody's very excited. And, retail generally tends to buy the top and sell the bottoms. And the idea is to get them to understand why they're doing that. Where's the psychological side of it? And then how to start identifying when tops may be near, what kind of things do we look for in the markets? I get the most pushback, honestly, online is from people who, they kind of follow me intermittently. They don't seek to really understand what I'm trying to explain. And again, they get to that point. They're newer traders. So they get to that point where they think that just because you're talking about a big macroeconomic thing, if it doesn't happen tomorrow, they think, oh, you're wrong. And, oh, you've been sitting on the sidelines for 6 months or 12 months or something like that. And
opportunity lost cost.
yeah, exactly. Yeah. And, and that isn't the way it is. It's just the idea of trying to figure out what may be going on and making sure that you understand what to look for. And that way, as it plays out, if it does happen to play out, you're prepared, because otherwise, I mean, it really scares me, because if things happen the way that, to me, they seem to be lining up to happen, I mean, we're talking serious kind of depression type stuff going on, and a lot of people are going to get hurt. A lot of people that are just becoming retired, they're trying to live off their savings or off their stocks, and their portfolio and whatnot.
Let me ask you this, Chris. I'd be interested in a wave count. I'm looking at potential reasons why there could be a problem. And the 10-year yield went from, about 50 bips to 118. Could that be both a reason for a bull market in the dollar and a repricing of risk? Do you have a wave count on the 10-year yield?
I don't think I've got it at the moment, but I think you're in the right thought process there. My one thing is, if we look at, for instance, if we look at the Fed, and the Fed's learning the things that it thought it knew, the things that it thought it understood about unemployment and the market and all of the, and dollar printing and all this for the past 20, 30 years. They're all of a sudden they're starting to find out these last 2 years that, wait a minute, that stuff isn't happening the way that they thought it would happen. And I think that's a bigger argument for the fact that, again, going back to this whole idea of global macroeconomic stuff, that there really isn't a lot of, I've got my opinions, the Fed's got theirs, but at the end of the day, nobody really knows for sure what's going to happen. This is so intricate. The Fed goes over here and they say, okay, we're not going to touch the interest rates, but we're going to mess with the yield curve. And they do all these different things like this, trying to get the economy to do what they want it to do, what they need it to do, which is they need the credit to continue to expand. But at the end of the day, I think you just get to that point where people just say, listen, I can't do it anymore. I'm not going to keep taking out more credit. It doesn't make sense. We've got all this stuff going on. And then now we talk about, again, the COVID going on here. And so the newest thing about that, I believe it came from Boris over there across the pond, saying that this new variant is potentially, somewhat more deadly than the original variant. The U.S. is doing this quarantine stuff now for anybody entering the U.S. I mean, I don't think the economy.
Do you think there's going to be another lockdown? Biden said he wouldn't. Do you think he's going to?
Oh, Biden was a big one for the lockdown before he became president. And I wouldn't put it past the thinking, the way that the thinking goes over there in that camp right now. Okay. And this is not, of course, a political opinion on my side. I think all politics are just ridiculous, but the way that the thinking seems to be on that side over there, I wouldn't be surprised to see it if the numbers really started pushing up more than what they're doing now, because the idea on that side is, the government's going to take care of it. And I think that's what people, in the stock market and everything seem to believe. We look now and they've got these record level of zombie companies now. Well,
you know what? There are a couple shifts that may not be as friendly to the stock market. Number one is the new SEC chairman, Gensler, who used to be a banker at Goldman, and acted like a banker, but his views have changed over the years to a much more, Warren-ish type of thing. And then you have someone like Janet Yellen, who's talking about taxing accounts, stock accounts, if you don't sell the asset. So it's almost like an asset tax. If your portfolio value is 10 million, whether you sell and take profits or whatever, there's going to be some type of tax on the value of your portfolio.
Yeah. Yeah.
Yeah.
Yeah. Using some, using that mark to market mechanism to do that. Yeah. Taxing you on unrealized gains.
Yeah.
I think it's absolutely silly. Especially, I don't think that, in the midst of this economic stuff, this economic issue we're having now, that you go and do things like that. I mean, I don't think it's necessarily a good thing to do at any time, but really, when you've got an economy that you're trying to get going, the idea that all of a sudden you're going to tax people there, like, oh, the people are going to have to pay the tax. I don't know. It seems misplaced at the moment, especially.
Okay. What else is on your radar, buddy? So we should be alert for a dollar bottom, but you don't think this may not be the dollar bottom. Could we break all the way to 88.5? And in the dollar, the recent low has been what, 89.20. 88.5 was a big number, and it looks like a line in the sand for a lot of people that even believe in a stronger dollar scenario, milkshake scenario, that 88.5 has to hold, or goodbye dollar. What do you think?
I don't think it's necessarily goodbye dollar if it doesn't. I think it's a definite place you want to watch. So I've got this area over here, about 89 coming off that. And then of course, heading down there toward that 88.5. I think if you're kind of, let me zoom out here a bit more. Let me see. I think if we kind of lose this area we're at, again, I think we're looking down here, maybe, low to mid 80s, still a chance in there.
Okay.
And I definitely think it's possible. I don't ever say it's not possible. Anything's possible.
Right.
But we just definitely need to see some movement up here. But we've seen things recently. So what has happened? Japan, the Bank of Japan, back a few months back, bought a whole bunch of dollars. They said as a precautionary measure, basically against the idea of deflation. And I think that's interesting because with Japan, that's where all this QE stuff kind of started over there back in the 90s. They had that lost decade there.
Right.
And so the fact that they were buying up whatever it was, I mean, it wasn't a significant amount. It was decent enough. I think it was like 600 billion or something.
What they buy?
I'm sorry?
Stocks. What did they buy? Stocks? BOJ?
They bought dollars.
Dollars. Okay.
Yeah.
And what was the rationale for that? The BOJ did it, or the government?
Yeah, exactly. And it seemed to be the rationale was just that they were just in case. It was a precautionary measure based on, just in case the value of the dollar went up. Nobody wants to deal with what we just had recently, which was March of last year, where everybody kind of went for it. We've got China right now trying to become its thing. It's trying to, supposedly take out the dollar as the world reserve currency. But, even something like that isn't anything that happens overnight. I think there's a lot of romanticizing about the death of the dollar right now, and everybody kind of imagining where that can lead and what that can, go on with that.
Well, that's been going on. I'm not a youngster anymore, but I've been hearing that since I was in the business. Okay. I mean, we're going back to the 70s, and probably Bretton Woods was when it started. So the death of the dollar has really declined quite a bit from, historic highs, but it didn't die. So interesting. Anything you want to wrap it with, Chris?
No, I mean, at the end of the day, I'm going to be honest with you, man. I think it's I think it just comes down to the dollar. I think that's really I think that's the beginning and end of all of this. And I think if we see the dollar popping up through 91 here and kind of going up, there are no guarantees in trading, that, but I think if we're doing that really kind of sends a strong signal that, hey, this might be the bottom for a bit. And
okay. I kind of have see the potential of a move to 95 to 96, but I think that's going to be a real battleground for your thesis and the dollar bears thesis. Is that an important area to you, 95, 96?
Yeah. Let me pull out here. Let me see. That's right about.
And we'll wrap it with that.
Yeah, exactly. Yeah, I've got this kind of this 94, 90 level here.
Okay.
That I'm still kind of watching. So yeah, I think
if we can,
impulsively move on through that and close above that on a larger time frame, I think that really kind of, all but guarantees, I think that, that we're heading up to, quite a bit higher, that, the whole deflationary scenario comes in. And, I think that catches people off guard. I think everybody's kind of waiting for it to all, head the other way. They think the money printer's just going and that's it, but not understanding where the money's actually going via QE. So,
Chris, there are some people, and I'm getting a question from one of our attendees that believe the dollar and metals could go up at the same time. Do you think that's possible? I mean, people are making, some very smart people saying, yeah, be long the dollar, but also be long gold. And, isn't that kind of what happened in the 30s during a deflationary period?
Yeah. I mean, everything, when you first jump into that period, when the dollar starts popping up, especially now, everything takes a hit. Metals, everything goes down.
Yeah.
But yeah, I think that's where you start. I think you start with the dollar, metals join in eventually, but I think you go from that deflation to that stagflation before you get any real just inflation. I think, of course, that's all pretty harsh for the economy and what's going on, which means, a lot of jobs lost, a lot of businesses going out.
You got an extra bedroom for me?
Anytime, man. Anytime. If you like San Antonio.
Oh yeah. I'm looking at South Padre Island for a place to live.
Oh man, it's a great place. Lots of fun.
Yeah. Okay.
Yeah.
All right. I'm going to talk to you about it. So, where's the best place for people to follow your grisly work, buddy?
All right. Well, I mean, they can follow us on Twitter at TX West Capital. They can also hit us up online at howtotradetowin.com. We've got a couple other things we're going to be launching here in Q1 of this year, which are going to be pretty exciting. Things having to do more with macroeconomic and global financial related concepts and explanations and commentary and whatnot. So if they follow us in one of those two areas there, they'll be able to do that. Join in with that when we launch that.
Okay, everyone, at Texas West Capital, TX West Capital. Yes, Christopher Inks, my trading warrior brother, rooting for you and hoping that we're wrong about some hard times ahead. So
hey, I'll tell you what, man, that's it. You know what? Worst case scenario for me is that I'm wrong and we all get rich and make money, right?
Yeah. Okay. Either way, we can make money being short too, buddy. That's right. So that's a wrap for today, everyone. And Chris, thanks so much for coming in. And, I think people need to hear the other side of the coin and reasons instead of just being bombarded by one side. So I appreciate you being the devil's advocate today.
Well, thank you so much for having me, Dale.
All right, buddy. We'll get back together in April.
Awesome. Sounds great.
All right. Everyone, remember, don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. You're very welcome. You're very welcome, Ingmar, Monica, Chris. They all enjoyed you. Thanks again, buddy.
Appreciate it. Thank you, man.
Adios.